What's the difference between CBDCs and cryptocurrencies?
If you look at the Bank for International Settlements, which is the central bank's central bank, and you look at their money flower, there is a very small place that they have set aside for private cryptocurrencies. There's a much bigger space that's set aside for commodity currencies, silver and gold. The utility of the central bank's currency, the CBDC, would be control and surveillance.
What are CBDCs?
CBDCs is the acronym for Central Bank Digital Currencies. So they're calling it an evolution in money because now it is completely intangible, but it's also 100% under the auspices of the central banks where they can and the government, where they can monitor all of your income, all of your spending. They can control what you spend your money on, how much you spend it on, how long it's even viable in your account, and everything else. I mean, this is how they get you full control. If you have money that is outside of the system, then you have a lot more freedom and independence. But that's not what they want. Remember, World Economic Forum said you will own nothing and you will be happy. I don't think you're going to be happy if you own nothing, because that means somebody else owns it and they dictate to you.
Precious metals shine on weak economic data. Gold and silver rally as disappointing U.S. economic data drives a dollar pullback. Gold breaks above $1,940 and eyes resistance at $1,975, $1,985, while silver tests new highs near $25, with a potential push to $25.90, $26.15 resistance. Dollar dips on soft payrolls data. The dollar index slips 0.36% to a 2-week low as U.S. private payrolls miss estimates. The ADP report shows an increase of 177,000 jobs, raising doubts about continued monetary tightening and pushing the likelihood of unchanged interest rates by the Fed to 89% for next month. Euro rises on inflation. Surprise! The euro rebounds 0.38% to $1.0921, boosted by unexpected German inflation at 6.4%. The data adds uncertainty to ECB's near-term policy, potentially leading to another rate hike. U.S. dollar faces uncertainty. The U.S. dollar's retreat continues due to lackluster economic figures affecting Treasury yields. Emerging signs of economic slowdown may shift Fed's stance, potentially leading to further dollar weakness. Technical insights on dollar and NASDAQ. The U.S. dollar index's failure to break trendline resistance at 104.50 triggers a pullback towards the 200-day simple moving average at 103.00. The NASDAQ 100 approaches a key resistance at 15,500, with a decisive breakout suggesting a move towards 2023 highs around 16,000. Let's continue our enlightening discussion with Lynette Zang.
Do they want CBDCs to replace the dollar, or is it going to be the dollar in a digital form?
Well, it is going to be the dollar in a digital form because what they know about transitioning us from one kind of currency into the next kind of currency is that they have to keep it as much, initially anyway, what we are used to. So that's why, even though things have changed. I mean, we had a gold-backed dollar, we had a debt-backed dollar. Now we'll have a air-backed dollar, or based upon purchases, things like that. But they're all called the dollar, so that you don't realize that anything has changed when in reality everything has changed. And they've also stated that they are not going to automatically take cash out of the system. Rather, there'll be a chip in there that will follow their policy, because even though cash use has been declining, and they started this process in the 50s, this is not something that happens overnight. This is something that takes a long period of time. So the frog in the pot of water, right? So they've talked about leaving cash in there and even letting the current system run parallel with the digital dollar until they get enough participation and compliance, because that's not a guarantee.
What are some examples of how they can program the money, and why would they want to do that?
Right now, it takes 18 months when they create a policy. Takes roughly, 12 to 18 months before it trickles through the economy. That's why we're starting to see the slowdown now, but it's based upon the increase in interest rates that happened a year or so ago. Okay, so we're just starting to feel that effect. So there's that lead and that lag time. Going to a CBDC eliminates that lag time. So the statement for governments, because there's two entities that benefit from it. I didn't say three, I didn't say the public, but for the governments, they can charge lifetime taxes. They can pull the taxes out whenever they want to pull the taxes out. For central banks, what they've stated is, number one, they are going to sell it to us, or they've said that they're going to sell it to us, as we will handle, there will be no more inflation. No, because they're going to go negative rates and there will be hyper deflation. But what they've said is once we have CBDCs, there are then no limits to how low we can push interest rates, which eats your principal and could inspire you to go out and spend it. So this is really critical, because the other thing that they said is, again, that they could have their finger on the button of the economy 24/7. They could be tweaking policy and boom, instantly know whether or not that's going to work. I mean, we're a consumer-driven economy. If you attempt to save those CBDCs, you will watch your principal erode so fast that the most likely outcome is that you're going to go out and you're going to spend those CBDCs and try and put them in anything that will hold their purchasing power better, which is what happens in hyperinflation as well. So once we go to a CBDC and they completely wean us off of the dollar and the current system, where they get it close enough that they feel they've got enough adoption, that's when physical paper will likely go away. But then the central banks, and particularly the central banks, have full control over your choices. And if you make choices that do not align with what they want, they can control that, unless you have real money outside of the system.
Don't forget to join us as we explore the unfolding events. South African crypto premium surge after Kraken abruptly starts blocking deposits by local residents. Africa-focused remittances. Fintech. Lemfi raises $33 million in Series A funding round. Swiss SIBA Bank obtains in-principle approval to offer crypto services in Hong Kong.
What are the ramifications for getting rid of cash indefinitely moving into this digital dollar?
Well, right now, at the moment, cash is a debt instrument. You can look at the top of the bill and it says Federal Reserve note. And a note is a debt instrument, but it does not have a coupon. So it pays 0% interest. So you need gold really to protect yourself from inflation, because inflation is baked into the current monetary system. With the cash, they know how to deal with that, and that is simply by putting a chip in there that follows whatever interest rate the central bank is choosing. So it kind of eliminates that, but if you have cash right now, it's still considered cash in the wild. Once they get rid of the cash completely, then, really, once they put the chip in the dollar, whether it's cash or not, they kind of have you by the cojones.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.